Hello trader, I'm going to do a complete multi-time frame analysis on gold. Let's see what kind of trading opportunity currently we have in this instrument. As you can see on the market opening, gold is showing significant trading opportunity. Now before we discuss how we can trade, first let's look at bigger picture, looking at the monthly time frame to see overall picture in the market. Now from the monthly we can see that previous month's gold has closed with this long bearish engulfer, which in fact has triggered all-time high liquidity and created this long bearish candle. Now as a result, this month once the market opened, we have seen an initial retest of this monthly resistance, and again we have seen another rejection, giving a very high probability for gold to continue to drop. And as a result, this month also we have seen the monthly low is broken, created an overextended, and then gold has gone up again to test this resistance line. Now as you can see, gold currently below this monthly opening and closing, and what I think that gold may continue to drop for longer term perspective. Now if we look at the weekly, previous week we have seen a long doji. Now this doji maintaining a lower high with this weekly resistance and also created a lower low. What I think that with that weekly candle this week we might see again initial drop, which is likely to happen, and we could see that gold at least testing 50% of this long weekly candle, and then we might see later a bounce to the upside to test the resistance line. So we can expect initial downside on gold to test this, to fill that imbalance in that area on the weekly time frame. As we see that there is a strong impulse on the weekly, there is a lot of seller in this market, and back to back 2 weeks we saw that weaker response from the buyers. Now if we look at the daily time frame on gold, how it is doing, we can see that this is the daily last day of trading week form a doji. Now if we look at overall market structure on the daily, we can see that this is the daily resistance, and the price is maintaining series of lower high along this resistance. Highly likely that we could see another wave of drop, as this is the daily support and this is the resistance. We might see even the price is margin in between this support and resistance for longer term perspective. Now if we look at further lower time frame on the intraday 4 hour perspective, we can see that there was a massive drop, massive rise from this level. With this liquidity grab, gold has created this move towards the upside, consolidated, has gone up to the resistance line. Now we saw that couple of sessions gold had another drop. Currently this current sessions candle, we see that gold now in this area, there was a bounce from this support level. Now what I think that this bounce is a pullback of this movement, an impulse correction. We can expect another impulse, and what I think that gold slowly may continue to drop after little pullback to the upside. Now if we look at further lower time frame on the 1 hour chart, we can see that gold, this is the impulse and the price is consolidating in that area, and we saw that there is a rejection from the support level. As we see this rejection on the lower time frame, what I think that this is the high of this head and shoulder on the 1 hour perspective, and this is the left shoulder. We could see a right shoulder formation on the 1 hour, and then we can expect gold to continue to drop in that direction. So currently we see that gold already has formed that long wick candle, which in fact on the 1 hour has triggered also a liquidity zone. This is where I will be waiting for a lower time frame confirmation for a potential selling opportunity. So as soon as you will find suitable entry opportunity on gold, we'll consider going short with a high probability trade setup with our students. Now if you find value in this analysis, then smash the like button and also leave a comment below. Let us know which way you are trading gold. Thank you. I'll see you soon in my next analysis.